Good afternoon and welcome to BizTech Asia's Midday Market Watch. It's Friday the 3rd of May. I'm Jeffrey Halley and my co-host today is Samantha Voon. And our guest today is a great friend of the show, Kelvin Wong, Senior Markets Analyst at Oanda in Singapore. Kelvin, good afternoon and a happy Friday to you.
Hey, good afternoon and happy Friday to you, Jeff and Samantha as well.
Right, we'll move along to stock markets in Asia today, as we normally do when we start the show. It's a bit of a quiet day. We have holidays in both Japan and mainland China today, which is muted activity in the region. But Hong Kong is open and it has climbed 1.2%. Perhaps getting a tech tailwind after Apple's results overnight. The S&P ASX 200 in Australia is up 0.6%. South Korea's Kospi up 0.12%. Singapore's STI has climbed 0.32%, with Kuala Lumpur's KLSE rising 0.39%. Kelvin, your thoughts on today's price action?
Yeah, sure. So if you look at the short-term price movement of the major stock indices for Asia that is still open for today, we are now actually trading on a positive bandwagon from overnight US positive gains, primarily led by the mega cap technology stocks again. And do not forget, over here is that in early Asia session today, that means right after the close of yesterday US session, we do have Apple earnings result as well, which is came in better than expected because our market initially has a low ball number due to the fact of the last few months of a weakening trend in China in terms of iPhone sales. But the numbers came in slightly better than expected. That actually give a bit of jolt up to Apple shares as well, adding on to I think it's a 6% gain in the after hours trading. So that actually create that positive feedback loop into these Asia major stock indices that is still open for today.
Oh, well, Kevin, let's talk about the FX market, right? The Fed committee decided to maintain the target range for the federal funds rate at 5.25% to 5.5%. What has the current state of the FX market been since the announcement? And also do share on the potential FX intervention by the BOJ to strengthen the Japanese yen.
Yeah, sure. So it's a very interesting interstate of play that we see in the FX market this week. So let's take a step at a time. So let's talk about the latest Federal Reserve kind of a indirect guidance on the monetary policy. So for sure, we know that they actually acknowledge that inflation in US is much more stickier and elevated than they expected at the start of this year. So we know that inflation numbers are not going down pretty fast to that 2% target. All right. So no change in that 2% target. So they are actually still data dependent. So what we're going to expect over here is number one, the next dot plot projection, which is going to release in the June meeting. So they'll release every quarter. So the next one will be in June. The previous one in March, they're actually expecting 3 interest rate cut for 2024. So that's going to be watered down to at most 1. Over the worst case scenario, there could be no interest rate cut, which is a very low probability because during the press conference, there's still an indirect hint by Fed Chair Powell to indicate there's still a chance of an interest rate cut. And he actually threw away the possibility of an interest rate hike when various journalists quizzed him about that. So that actually led to a kind of a tempering of that rising US Treasury yield, both on the 2-year and the 10-year that was seen in the last 3 to 4 weeks before the 2 days FOMC meeting. So with that 10-year US Treasury yield, more or less, it starts to actually temper down, kind of a moving in the sideways range configuration, but still holding above that 50-day moving average. So overall, what we could see over here is more like a short-term sideways consolidation in the 10-year US Treasury yield, which eventually lead to this dollar strength being muted in the last week or so. That is getting more prevalent in this week. And right now, here comes the Bank of Japan. So the Bank of Japan actually uses this opportunity due to the latest Federal Reserve guidance, indicate to them that, hey, yes, we know that we are not going to cut interest rate too fast, but we're also not going to hike interest rate yet. So that actually softened the pace of that US Treasury yield curve increase. So that's give more room to the potential effectiveness of Bank of Japan intervention, because we know that Bank of Japan, the fundamentals in Japan are still looking to be more supporting a weaker yen story due to that yield curve premium between the 10-year Treasury yield and the 10-year JGB, as well as the 2-year as well. So with that in mind over here is that the Bank of Japan created this kind of level for speculators to actually prevent it from reaching above that 159.60, 159.60, 160 psychological level, creating a kind of land in the sand, preventing the dollar yen by breaching above it by speculators. And they actually did it rumored. Okay, so this was actually, they did actually mention the what you call official statement of intervention. But however, due to BOJ, we call it latest current account release statement on Thursday, there was some calculation by some analysts that indicate high chance that MOF instructed BOJ to actually sell the dollar against the yen. That means they bought yen on Monday, and as well they came in during the late US session on Powell's speech on Wednesday. So that created a bit of fear in the market right now to actually push up the dollar yen. So the next question to ask myself is, we'll ask ourselves, has this managed to alter the major trend of the dollar yen? That means, will yen start to see a great major bullish reversal against the dollar? That means, i.e., the dollar yen coming down towards what? The 148 level, then going after to 140 level. To me, I can tell you there's no clear indication right now that the broad-based dollar strength got to weaken from here, because the fundamentals are still supporting a dollar strength story against the yen in a longer term perspective. But for sure, things may get changed, especially if we get to see a new administration back in US on the later part of the year. That means we're not going to know that in November. So we know that if Trump's get re-elected again, he do favor a much more weaker dollar policy, because of he wanting to make manufacturing a business in America great again. But that will be another story for another time.
Right, yeah, nothing like introducing a bit of two-way market risk to keep people honest. And I can see, actually, looking at my charts here, that the 150 and the 200-day moving averages are still quite some way below where we are in dollar yen at the moment. Kelvin, it's the first Friday of the month, and that means it's US Non Farm Payroll Day. What should we expect from that data tonight? And is there any other data points you think we should be watching out for as well?
Yeah, sure. So maybe before we talk about non-farm payroll, deep dive into it, for sure, do not forget we do have the ISM services PMI data that is out later, about 1.5 hour later from the non-farm payroll release, which is 10 p.m. Singapore time. So something to keep an eye and watch for. So before we dive into the ISM data breakdown, let's talk about this non-farm payroll data first, all right? So for non-farm payroll data, the last few months has been pretty much surprise on the upside, where market can tend to have a very low ball consensus. So for example, previously last month, for the month of March, market has a very low consensus of about 160K jobs increase, but market actually surprised to the upside by reaching above 200K, which came in at 232K. So this time round, market still has another low ball figure again, but slightly higher above 160K. So market is expecting 181K increase for the month of April. So that actually is a slight downtick to 232K. So if you look at the past few months of hit and misses between the actual and consensus figure, it seems to us that the consensus may be under projecting again for this last month of April, pardon me. So if market came in back again at a strong number at 200K or above, so that could actually give a bit of job up to that US 10-year Treasury yield again. So that could potentially see a bit of dollar strength coming back into the picture. But we know that this is Friday, so there could be a weekend positioning, which market speculators look for overnight position. Perhaps that dollar strength may not be so minute or so pronounced. And do not forget, market still has the fear of that BOJ watching the market. as well. Then next but not least will be the ISM number. So the ISM number will be more or less impacted the longer state of the economy, and potential that could actually much more impact on the US stock indices, because potentially that could relate to earnings growth potential as well in the long term. So we talk about this ISM number over here. So ISM data for the services is important, much more important than the manufacturing. Why? Because we know that more than 3/4 of the US economy is driven by the services activities instead of manufacturing. So what's interesting on the services PMI data over here is that, yes, we know that any point that's above 50 is expansionary for sure. But if you look at the current situation right now, since the start of this year, the pace of expansion has started to slow off. So at the start of this year, the numbers came in at 53.4. Then for February, it dipped down to 52.6. And for the latest one, on March, it dipped down to 51.4. So market this time around is expecting a slight uptick to 52. But however, if they start to disappoint again by slipping down to close to 50 level, that is still in the expiry mark, that actually indicate to us that the US economy is in the state of slowdown, which was also reflected most recently on the Wednesday data on the ISM manufacturing, which slipped down into the contractionary mode. And also another component to look out for will be inflationary pressure coming back into the services sector in the US economy, will be the subcomponent of this ISM services PMI. They call it the ISM services price paid. All right. So if for the month of March, it has a very low number of 53.4. So right now, if the data for this coming month of April, which is going to be released together with the ISM services headline number, if this number increases to 55 or 57, what we see very similarly to the ISM manufacturing prices paid that was released earlier this week, it could actually increases the risk of stagflationary pressure coming back into the US. So that stagflationary risk scenario could be out again, and that could actually potentially create a bit of negative feedback loop into the US stock market. Bear in mind that so far the whipsaw movement that we see at the start of this week on the Nasdaq 100, about the S&P 500, is still kept below their 20-day and the 50-day moving average.
Right. Kelvin, thanks for your insights and for joining us today.
My pleasure.
We've been speaking to Kelvin Wong, Senior Market Analyst at Oanda in Singapore, on BizTech Asia's Asian Midday Market Watch. I'm Jeffrey Halley.
And I'm Samantha Voon.
And this video and podcast will be on our website, www.biztech.asia, as well as our social media platforms. You can also catch it with our syndication partners on their TV, radio stations, and websites. Remember to like and subscribe. Thank you for tuning in today.